So your goodwill was right. Your working throughout. So the examiner knows that, come on, this student, professional presentation, you're calling him. Now, by the time you get to console, which is your last question, all other things being equal, you've already passed. All other things being equal.
So the figure that you're going to see.
Are you getting the idea? So he just, because this is the thing you start or you do before you go there. So he knows time chopped you. So instead of the 20 marks, chopped you. So instead of the 20 marks, yeah, you get a working there. So that what some people also do is that they leave space. So they will assume that I'm going to use 3 leaves for the workings or 2 leaves for the workings. Then on the 3rd page, so they write workings on top, 2 leaves. Then on the 3rd page, they write the cash flow down.
Yes.
And start with cash flow from operating activity and bring profit for the year. Then they leave it and come and start with the workings. With that, so if you are not done, the examiner knew that like the pro forma was already set, so you would have what? Brought the figures in. So in that case, if everything is right, you can get between 12, 13 marks in relation to that. Because the examiner knows that now what you are left with is just bringing in the figures. Bringing in the figures.
12 marks out of what?
20, right? It's no good. Remember, you've already gained your pass mark. All other things being grown from the other end. Opening balance, share premium. Can I have the answer, the figure? Opening balance, share premium. 172. 172. Closing balance. So it's like 224. Then look at what's happening here. The subsidiary, right? We're going to bring it. The acquisition of the sub, the share exchange. Still from workings 1 is 30. Balance it out. The difference gives us what? The share premium on what? The share issue. How much do we have? I think that should be 10. 10. Therefore, total cash from issue of shares, remember we did this last week, will be 8 million from the share capital account plus the profit we get here, 10 million. And that will be what? 18 million. So when we go to the financing aspect of the cash flow statement, the 18 million will go there as what? An addition. It's an addition. I said when we go to the financing segment of the cash flow statement, it will be there as an addition from the stated capital and then the profit we made on the issue of shares. Then to the workings that Derek likes a lot, income tax.
Why the 2,000 can be different like that?
2 and 2. Income tax. So Derek, here you are. Okay, so let's look at the tax account, income tax account. Opening balance, please. Remember in this question there are both deferred tax and current year tax. So we're going to add the 2 up. So check it up and feed me with the figures quickly. Let's go for it. Opening. What do we have? Can you see current tax payable and deferred tax liability?
Yes,
Add them up for the opening. What is the figure?
48.
Have you added?
Yeah.
Give me the individual figures here.
26 plus 22.
And that will be what? 48. So give me close. The reason why we need to write it this way, write a 48, is that we know where it is coming from. Okay. Closing, right? 28, 38. And that will be 66?
Yeah.
Okay. Now, what is happening? Now, go to the income statement and see what kind of thing is happening there. So, this is where Derek's issue comes on board. So, Derek, we're going to feed everything feedable here. What are they?
Income tax expense.
How much?
34.
34. So, charge for the year. 34. What else?
Income tax relating to items that would not be reclassified.
How much is it?
17.
So, that is P&L. What else? Okay, let me put it that way. Let me put it this way. Relax. Let me put it this way. Other comprehensive income.
Other comprehensive income, so the tax so
And
49. Hey, then.
net of
Other,
No, it's not. It doesn't relate to tax.
it says
Yeah.
income tax. Sorry, it says other comprehensive income for the year, net of tax. That means the income, the tax payable on that income has been done already. So this is an addition. You saw it wasn't a subtraction. What else? Is that all? The subsidiary had a tax. The tax real.
Yeah.
How much?
4.
4. That's it. That's it. Look again the content of the income tax account here as compared to what we did last week. Agrono and Yepe. Question be our Fabiano. Asani is different. But at the end of the day, no. So let's balance it out. The balancing figure will be the tax paid. Balancing figure will be tax paid.
So when does a figure come to the debit side? Even when it's not negative.
When of the tax account,
Yes.
maybe there is a deferred tax asset. Even that one you will net it off with the opening and closing. Because if there is a deferred tax asset, that has a debit balance. So if there is a deferred tax asset, you bring it to the debit side. Can I have a balance for the, what's the biggest? Yeah, definitely the credit side is biggest. How much? 103. 103. So difference? 37. Please you confirm so that you. Okay, so let's go. Now, are we done with our workings? Who can tell me what we are left with to do?
The movement.
Movement, correct. So let's go for it. 11. Endorse movement. Where work is there? We can say, well, lose it. Movement. Working.
So you're likely to skip something.
No. That is why I want you to follow the method that I'm following. In the sense that I know what I have to calculate for. So 1, goodwill. 2, goodwill at acquisition 1. 2, goodwill account for impairment. 3, PPE. 4, I need to go for associate. 5, retained earnings. 6, NCI. 7, share capital. 8, share premium. 9, income tax. 10, I can go interest paid because there is interest there. We've not prepared interest accounts there. So I can swap it out. So just let the workings be in your mind because realize that there is no note really guiding us as to what we have to do. But if you know the various accounts you need to prepare, then you can go on easily. Okay, you do that for you. Okay, so maybe 11, let me do the interest accounts first, so that I'll do movement last. So interest. Can you feed me on interest? What do we have about it?
4, 8.
For opening,
4,
closing,
8.
mm-hmm.
And there was a finance cost paid
Of
1 month by
You sure you're not lying to me?
115.
Interest.
So more or less you prepare account for almost every item.
That's what they are doing to us. Who is doing to you?
Sure, and the exam is.
They are doing to you. You sure about that? What's the finance cost there?
115.
Are you sure you're not lying?
No,
It's 16.
Yeah.
Have you seen it?
Yeah, so it means we have to draw lines in the exam hall so that we don't make mistakes.
And I say you have to know you need to do that now. So it's 16, not 115. So we balance it out. 20, 20, and then what? 12 for the balancing figure, that is the tax paid. 8, tax again. Nhyira, interest paid.
Like that.
No, tax is Derek's favorite. The tax account.
Derek's favorite.
Derek's
Wow.
favorite.
Very close. You spent 5 minutes.
25 minutes for him.
He's teaching me.
Hey, Charlie. So that's the interest account. Very simple, sweet, straight to the point. Then, I want to save this space here, then I'll do the last movement on the last page. So let's look at next cash outflow. Next cash outflow on acquisition. How much cash did we pay?
26.
Cash paid. We paid 26 million. Cash of the subsidiary. On the sub is 8. So technically, how much cash went out?
Always one in brackets.
Paid. So it should be in bracket. Receive 8. So it becomes what? 16 in bracket. So technically, cash paid
Are you sure?
on acquisition.
Are
Yes,
you
madam.
sure it's not 18?
What is 18?
8. It says an 8.
It will be what? 18.
Yeah.
Alright. So that's the net cash flows. So if you go to investing activities, this is where you take what? The 18 for the acquisition of that subsidiary company.
Will you go to what?
When you go to investing activities, then there was a note on financial assets. I think I've not paid attention to that note. Did you see that note on financial assets? Note 3. Other income represents gain on financial assets at fair value through profit or loss. The financial assets are invested in quoted shares. They were purchased shortly before the year end with surplus cash and were designated at fair value through profit or loss as they are expected to be sold after the year end. No dividend has been received. So we're going to prepare financial assets account so that we find out how much we actually bought it. Because you see, at the end of the year, the figure there in the balance sheet for the financial asset is how much? 16. But did we buy it for 16? No. Because there is an income in the income statement relating to something. Where is that? Can you see other income here? 6. That means the financial asset was bought for at what? 10. So we prepare financial asset account.
I didn't see 6.
Oh, go to the income statement. So opening balance, nothing. Closing balance, 16. Profit for the year or income is what? 6. So the balancing figure is 10. That will be the acquisition. Very important. Very important. Huh. So finish writing and let's do the movement and then we go to the cash flow and then. So with the movement in working capital, we bring the opening balance as given in the question. We bring the subsidiaries working capital. Inventory was 20, receivables was 16, payables 12. And then if you remember in workings 4, we did workings for the equipment that was purchased on credit. The closing balance, which was 17, we bring it up. Then we compare that to the closing balances, and then we strike it out and find out. Now if you look at the inventory, it is reducing, which means that we are selling some inventories. Receivables is also increasing, which means we are losing money, so that is a cash outflow. Then payables is also reducing, which means we are paying our suppliers. So that is the balancing figure that we take to the cash flow statement. So can you prepare the cash flow now? Do you think you can give it a shot? Give it a shot in 5 minutes. Give it a shot. Take your spear or your bow and an arrow, and let's see if we can hit the targets. Madam. There is already, it's already almost 4.
I said.
These things, they take time. It takes time.
So now that you have closed out financial instruments, income.
Yeah,
Thank you.
that's what you want, right? Oh. Very
Fine.
you edit it.
You edit it. It's so cool.
So that will be inside it. I think the Saturday for Monday for you to start with corporate reporting. That's the last day I'll be meeting you. And that is a special segment that I'll be hosting with you. By then, we'll finish with our discussion. We've done the one-on-one discussion with me. We've done the mock. We've done the discussion on the mock. But that Saturday will be a final day that we meet where I look at final discussions with you on the level 3. And then we kick on very, very solidified key areas. So the whole of Saturday, learn on your own. What are you going to really learn on your own? It's the revision you'll be doing, right? So I leave you to go and do that on Sunday for Monday so that you go. So I psych you out the last one. Now, Uncle Sheikh on Swasi to say the initial. You know, we've used like, it's close to 2 hours. Yeah. Close to 2 hours on this question. Close to 2 hours. Okay, can I clean my board?
Yes, first.
Okay, let me just put in the figures and let's get out of this place. And Porter Group. Supporter for Michael Porter. Cash flow statement for the year ended 31st Ibazi. Is it March?
1st May.
Okay. 31st May. May for Mavis. 20x6. Okay. As always, we go for cash flow from operating activities. Now you're going to feed me. So you're going to open your workings and begin to feed me up with the things that I need. Profit before tax, what do we have there?
It shall only be wrong if you write profit before tax, put it down before cash flow from operating activities.
Oh, not really. Not really. Just that the profit before tax is done in the operating activity, so it's just appropriate to bring it before you bring the profit before tax. Are you getting it? Profit before tax, what we have? 112. Then we bring the adjustments. Come on now, feed me with the necessary things I need. First, depreciation. How much was the depreciation? 44 with adding. Impairment workings. How much? 3. What else? What else? What else?
What's the essence of bringing impairment? Because impairment does it
Nice one.
involve?
Before this figure was derived, the impairment was treated as expenses, like the depreciation as expenses. So it was deducted from total income when we derived this figure. Now, since it is a non-cash item, we add it back. That's all. Yeah, what else? Feed me up now. Remember the forex loss. Did you see the forex loss we did for workings what?
Yeah.
Was it workings too?
No.
The trade payables thing, or the fixed asset that we bought. The fixed asset we bought. I remember doing the workings now. I don't know. Workings.
I think the number of the.
Yeah, that's workings number 4. Now please note, we are adding it. Why? Because that loss was subtracted in deriving this figure. So we need to what? Add it back. What else must we bring? This time you go to the income statement and feed me from there. You got it? Feed me from there. Other income from financial assets. Can't you now see it there? Financial assets income. Can you see it in the income statement there? And the other income? 6. It was added to this figure. What do? We take it back. Because it is not our core activity. Share of associate profit was also added in arriving at this figure. So we take it out. How much is it? 12. What else do we bring? We prepared interest account. So we need to add back the interest. How much is the interest? How much was the interest charged in the income statement? 16. We add it back. We add it back. So these are the items we bring in relation to that.
Shouldn't we subtract what was actually paid?
We will come down. We will come down. So this is the before movement in working capital. Are you getting the picture? So cash flow. Can I have answers, please? What?
The interest isn't not the interest paid rather.
No, the one that was charged in the income statement will first be added. This was what we were saying last week. We will add it, then the one that was paid will be subtracted later on.
All right.
Do you get the idea? That was what we were mentioning last week. The interest charged in the income statement will be added, then the one that was paid, the workings we did for the payment, will be subtracted later on, after we deal with the movement in the working capital. So can I have arithmetic for this, please? Any fastest hands on this, please? $159 positive. Then we bring change in working capital. What are the issues about the movement in the working capital? Was inventory increased or decreased? We said decrease. What workings was that? Workings 14. How much was it? Decrease in inventory 34. What else? Trade receivables.
Yes.
Was it increase or decrease?
It was
Increase. Still in workings 14, I guess.
Yeah.
How much was it? 4. That will be subtracted because it's increasing. What happened to trade payables?
It's also decreased.
Decrease in trade payables.
Yeah.
By how much? We subtract it, meaning we are what? Making payments. Then, what was the interest paid during the year from the workings we did? Interest paid. Workings what?
12.
How much did we pay?
It's
No,
11.
workings 11. No, that's
12. We paid. Then the interest paid. Workings what? I'm squeezing everything up here. Interest. Hey, did I
Next
bring
page was 12.
tax? Aye.
The tax paid.
Tax force workings what?
9.
10.
Hey, we said now, we said 10, 180.
Me. Everybody is running blood.
10.
We did number. I
37.
are we done?
What was workings 9?
Are we done? That's all. That's all. So look at the items that were brought here and understand. So this was the question that Elvis asked last week, that we need to bring the interest, then the one that we will do workings for will then be what? Subtracted. Because it wasn't the same answer. Last week it was the same answer, so we ignored it. I don't think last week we did workings for the interest because it was the same thing. So we didn't even include it. But ideally, and another was saying that I should still add it and come and subtract it, but I didn't. So you bring what was charged in the income statement as an addition, then what you paid from the workings will be subtracted. So let me have the arithmetic, and we get net cash flow from operating activities. Yes, what am I having? Oh, you won't punch. You are ocean fine. We'll me the time about class next week. Smack you, man. Say, I'm a smack you.
Tax lay, I know, actually.
Minus
37.
36.
That's your life.
Should I add? Okay. 1, 2, 3.
1, 2, 3.
1, 2, 3. That's correct. Who is confirming that? Okay. Let's go. Cash flow from Ebaze. Investing. You know the things that are supposed to be here. So feed me up. Activities. What's the first thing? What's the first thing? Acquisition of property, plants, and equipment. I think that should be workings 3. How much was it? Workings 3.
25.
25.
15.
Hey, Charlie. Number 18.
25.
Acquisition of subsidiary. That is the net cash from workings. Net cash. I think that should be close to workings 10 or 11, 12, whatever, or something like that. There is a workings we did here. Net cash, net cash.
That's
18. Workings
12.
12. What else? What else must come in the investment activities? Acquisition of the financial instrument. Sorry, the financial asset. You remember that? From workings 13. What 10, I guess. What else? Now feed me. Look at the workings and feed me with what else must come here. Investing activities. Investing activities. Mm-hmm.
Dividend.
Dividend to who? We did 3 dividend. Associate dividend, parent dividend, NCI dividend. Which dividend are you talking about?
Okay, so the dividend to the associate.
From.
From the associate, yeah, from the associate.
So dividend received. How much is it? Workings. Who is there? Workings what? Hey, one time Toronto figures now Toronto who hear me?
Right.
Ah. Then I'm hear me. How much?
11.
11. And what else? What else? Any other item? That's all, I guess. Add it up. That will give us the net cash flow. Now this one will give us negative. So this will be called net cash flow used in investing activities. Remember I told you that we could have brought dividend here. But I always treat it under the financing activities. What do we have? Negative. Then we come to cash flow from financing. 64. Now look at it. I said net cash flow used in investing activity. Used because it's an outflow. From because it's what? Positive. Finally, can I have the issue of shares? 18. That was working what?
Please mention my numbering is different. But I'll say 8.
It's 8 too.
8,
It's 8?
Yeah.
That's a lie because I wrote therefore 8 plus 10 should be equal to 18. Total
That
cash.
will be number.
So you can choose one of those guys.
So workings 9.
9. What again? Check the long-term loan. We were supposed to do workings for that, but I didn't. Long-term borrowing, it has increased. Give me the closing balance and the opening balance.
26.
You sure? Long-term borrowing.
320.
320 minus.
380.
Okay. So 380 minus 320. It has increased, right? That means there is issue of loan of what? 60. Dividend. Hey, to who first? Shareholders. Workings. 6. How much? 45. Next, dividend paid to NCI. Workings. 7. How much? 4. Okay. Any other thing we've not brought? Is there anything we've not touched from the notes that you have there? From the question and from everything, is there anything that we've not touched on? I think that should be all. Everything. So give me an answer.
Derek, please tell me, please. After the associates dividend 5,
reference to
NCI.
7 o'clock.
NCI. Get it? Wait for it. Come again.
Now you'll be using my terms. You are here. Now give me the answer quickly. How come you waste your number? You see, if you are writing and eating bread at the same time with whatever salad or whatever stew in there. Yes, what do we have? 29. Positive, I guess.
Yes.
Add it up. Bam, these three. That gives us net cash flows. 88. I'm not supposed to have that. I'm not supposed to have that.
This is the financing agreement.
Yeah, financing is 29.
And the investing.
But this thing,
Yes.
I'm not supposed to get that.
That
There. The NCI. That one. Mention the figures on the debit side.
What do we get? I'm not supposed to get this figure here. From my workings. 10, 25, 11. If you add all these things, I'll be get this. Can you confirm again? Can you confirm again? So how come I had 42? Can you imagine? I had 42. No wonder I was sleeping then. Maybe.
It's like
42.
42.
Yes.
Eh,
no,
I won't give that
the
answer.
subsidiary is what?
I couldn't have made a mistake like that.
It's 42. The subsidiary said 18.
Yeah, couldn't have made a mistake like
I'm
that.
not going to give that answer.
So give me next.
Salary to 25, 18, 10, and what?
11.
Oh, okay. Hey, I'm gonna what? And my son. You gave it. I remember this one.
Are you sure?
Yeah. But I
110.
Yeah.
I said I should give you.
NCI.
110.
The figures on the debit
Hey.
side.
And this is on that side. It's dividend.
And 200. Cash and cash equivalent at the year start.
How
And the
much?
balance carried down. The debit is 4.
The dividend is
And the balance carried down.
At the beginning of the year.
84.
8.
Yes.
Then on the credit.
Balance also is 28. And other comparison can be 4.
That's 48.
48.
Then they have
And when we add it,
1.
we'll get a closing.
48. That is what we want.
Cash and cash equivalent at year end will be, we add this to this, and that should give us 158. And as you can see, our cash flow has balance. So that's it. 25 marks for this question. And this was from the ACCA examination kit for corporate reporting. So that's it. Right. So if you're watching this lecture video on YouTube or on my website, click the link below. You will get access to the question that was solved and as well as the solution. So click the link below. You can get a download for it and learn it. Thank you.
So when I take the link, I can't see.
When you get a link, you can see.